Hey everyone, Tom here. Well, it's that time of the week. It is the exciting earnings of today that are going to probably make or break a lot of sentiment in the market. Today we'll be covering that. We'll also be covering our technical analysis thoughts on the S&P 500, Nasdaq, Dow Jones, and even gold and the dollar index. A lot of technical analysis to cover today. Stay tuned. So as we like to do, we like to quickly cover what happened yesterday in the market. Well, yesterday we saw a little bit of rotation out of the tech stocks, as I do really believe the market is a little bit scared about whether these earnings are going to hit the lofty expectations. I heard a very great comment though yesterday, and I think it's really funny when we look at how many beats are coming in. They said in the comment section, it's like a D student getting a C- for the first time. I think that's pretty funny because yes, most of these expectations were never going to be that high. The analysts had them very low because of the nature of the crisis. Companies like Logitech obviously did really well yesterday, and if we look through most of the big names, they all reported relatively good in terms of their expectations. Where the expectations change though is in some of these tech stocks. Microsoft's still expected to do pretty well, and so are some of these other ones. They do have the high valuations on them when compared to the other sectors. So today we have the big ones. We've got Tesla, Microsoft, Chipotle, all after hours. It's going to be very exciting to see what happens there. Yesterday we had Snap Inc., Coca-Cola, and those kind of companies come through, but nothing really compares, I think, with Microsoft's earnings. It will really show that sentiment to the market of what is going to be expected from these big companies moving forward. Let's get straight into the analysis, and firstly, let's talk about this Nasdaq. Let's talk about where the Nasdaq is and what I see a lot of people talking about. One of the things is, we'll just keep reiterating, the 20 exponential moving average is holding this market up. It is continuously holding this market up. It's not even a question that every time it bulls off this zone, it has been decent buying. Now, ahead of earnings, we are basically at a point of resistance. I wouldn't even be surprised if the market kind of comes up to this resistance close to the end of the day, just because it wants to wait for that Microsoft news to see what's going to move next. Now, we are at a resistance though. There's clear level here, 11,000. What is that? A psychological resistance of the market. It's an area where we expected profit taking to happen. Even when it got to 10,000 down here, we were saying it's most likely going to achieve or get around 11,000, and then it will struggle as people take profit. What could be happening next? Well, if we were talking about this from a double top perspective, really it needs to break through the 20 moving average and, more importantly, this intervening trough. You never want to predict a double top, especially in an aggressive trend. If you're trying to short this right now, that's super dangerous. But if you're trying to get into the market and you want to short it, then you would be waiting for it to get through the 20, then coming back up, retesting with what we call roll reversal, and then selling off. That's what you would want to see from the market dipping or at least coming down for some period. So the Nasdaq is showing signs of a little bit of weakness up at this resistance, but it's really just all speculation each way to how these reports are going to be. How good is Tesla's report going to be? How good is Microsoft's report going to be? If we go over to the Dow, I think a few other technical things are setting up that are worthwhile noting on the Dow. Well, firstly, the Dow's been weaker than the Nasdaq. No surprises. We talked about this to death on the channel over time. But what I like here is actually this buying support at 26,300. The reason I like it is look at this previous resistance here on the daily. The 200 moving average acted as resistance. That means it's probably going to act as support. And at the same time, we've also got a 20 exponential moving average interacting with that zone. It gives two dynamic supports around the point of roll reversal. So when we're trading and we're looking at these zones, we can then go down to the smaller time frames and say, well, this is the kind of area which interests me. We're interested in this area. We want to see how the price is interacting on the smaller zones. The daily shows us all of that. And I like this. I like this area quite a lot if it was to come down and test it again. Look for a change of trend on the smaller time frames, potentially buy it up to the resistance. Key breaks, of course, for the bears would remain, it needs to get under the 25,000. Before it does that, it's a bona fide uptrend, and that is how it sits. The reason we know 25,000 is so key to everything is because the previous resistance has acted as support, and therefore we know the market loves this level. We know the market finds resistance here, it finds support here, it is a key level. If it did come through these zones, get down here and then come back up, this would be big shorting into 23,000. And then of course, getting through 23,000, anything's really open at that point. It's open all the way back down. Is it going to happen? It doesn't seem likely with the Fed interacting with these zones. But right now, this would be kind of the zone, gets back up, hits the resistance, probably finds some form of profit taking, hits the support, which was previous resistance over here. And then if it breaks through that, we've got a pretty nice channel all the way into previous highs. So these are the type of key levels that I talk about a lot on this channel, and I talk about it to help you understand a little bit more about the key areas and why not every area is great. It's just finding the key areas that's statistically more likely to be successful that you want to get that opportunity in. What about gold? Well, I've left some of the channels up here. We'll go back to the daily and just quickly talk about it. Gold broke out, nice bullish hammer off the reversal. See that reversal? Gave you the opportunity. That's why I always say it usually gives you the opportunity. This time, maybe it didn't, but we did have that nice channel, broke out, all the metals went. Silver had a massive break of resistance the other day and then kept bulling into the sun. This one here, very, very strong, nice price action momentum. Where does gold go to next? It makes sense for it to go back to previous highs. So back to those kind of 1900s that it hit all those years ago. It's hard to believe that gold has not been at $1,900 an ounce since 2011. So what does that coincide with? Well, it coincides with the same time that the S&P 500 hit all-time highs. Strange coincidence there, yeah? Gold usually has not performed that well after the S&P 500 has made all-time highs. So then where are we on the S&P 500? Well, we're at a point where we're trying to now get to all-time highs. Is gold bulling? It certainly is. When it reaches this, will gold have hit resistance? It may have. That's the synergy between these two pairs right now. Very strange how it works. So basically, the S&P 500 is in that channel trading range. We've talked about how on the weekly, if we took the bodies from up here, the 3,200 to the 3,000, that's our body trade range. That pretty much points us back into all-time highs. We're above it right now. We are waiting for Microsoft news. If we look at the futures and what happened, notice how the futures came down and just quickly tested this previous resistance and then bounced off it. And everything's going to come down to what really happens in the earnings over the next couple of weeks, whether the bullish sentiment comes in or not. If it does from Microsoft, if it does from Tesla, if it does from a few other companies, we're pretty much going to see further bulling. A lot of people might point to this being a shooting star or this being a pin bar rejection. It is a pin bar rejection, but remember it's against that trend and it's against our break. It's not going to be strong enough for us to say, oh yes, we love this candle, we're going to short it. It's just not enough. You need multiple reasons to be in a trade whenever you are looking at trades. You want to make sure that you have at least 3 to 6 reasons. And if we're buying, let's say, off this break, what do we got? Well, we've got long-term trend. So that's one reason. We have resistance becoming support. That's 2 reasons. We're going to have some form of oversold indicator like a stochastic at this point. That's 3 reasons. We're going to have a Fibonacci of the last move as well. That's going to be 4 reasons. We have multiple reasons to be in a trade long. And the beauty of it is we could potentially just place our stop loss underneath the last swing. We don't have to necessarily place it underneath the full channel. We can place it underneath the last swing and get that aggressive entry and then take it for the aggressive take profit. And guess what? You can apply this to your shares. You can apply this to bullish breakouts on shares. They come back, they test, you take it long. Obviously, there's going to be certain instruments that don't trade that way. If you trade Tesla, you need to know when it's breaking out, you've got to be on. And you've got to be on it hard because it doesn't come back. It's the kind of stock where when it breaks out, it goes crazy and then it has 2 or 3 or 4 days of incredible bullish momentum and then it starts to sell off. So when you understand your instrument and generally the big blue chip kind of shares, these big giant stocks, they move in unison. They move kind of like in this slow, gradual pace. So when they get through, like an indice does, it often comes back and retests because of the nature of the fact that you're trading 500 stocks here up and down, really. You're trading that aggregate. Just like we said in yesterday's video, this previous resistance acted as support. That's what's going to be happening again. And it will usually work at least the first time and second time. And if sentiment changes, of course, that would break it down. But technically, statistically, very likely for it to be successful. So US 500, what's it showing us? It's showing that role reversal. We break it down. We can see here that it's finding that 20. The 20 is acted as the support. Again, why you have these great moving averages on your charts. And it's really just about these earnings at the end of the day. I'm kind of excited to see what happens with Microsoft and Tesla, mostly because I think it'll give us a good direction for the next couple of weeks. It will give us an idea of some nice trends. And I assume that when we go and we look at things like that dollar index and see how big the break is here, that a lot of people are preempting risk on sentiment. If we talk about the dollar index, which we do, we always say that if the dollar index is falling, generally that means there's a lot of risk on. People are moving out of the dollar. They're moving into riskier assets. They're moving into equities. They're moving into that kind of asset. So the dollar index broke our key support yesterday of 95.75. And when it broke it in serious style. Look at that styling all the way down. Very nice. Super break off the support. Didn't even come back this time. And it looks like it's going to go all the way down to the 90 kind of 460, 70 zone. And then it might kind of come back up a little bit. But usually if you were trading this particular pair, the more conservative, better kind of entrance is usually to say, okay, well, I'm going to wait for it to come back up, test the previous level of support, act as resistance, and then sell it off. If you take the break, that's good. You can sometimes take that with maybe half of your trade. And then you take the conservative entry with half of your trade, and that allows you to always be in these breaks. But yeah, this is a nice zone. I like it. I like where it's going. It obviously makes a lot of sense where it's going. And again, dollar index is just showing us that risk on sentiment is still in the markets for now. So hopefully that helps everybody. Tesla is selling off a little bit in anticipation of this market. Pre-market's up about 1.38%, but overall yesterday it was down 4.5%. It found that resistance, obviously that overextension happened, and I think that, look, Tesla, it's really setting up very similarly to that Nasdaq. It's found that high, it's coming down, it needs to get below this 1400 and really below the 20. It'll probably hover down to the 20 anyway over time because it's like hugging that level. So if you're a bit of a Tesla bull and you want to own it again, I wouldn't be surprised if it comes back to the 20 regardless of earnings over the next coming weeks. Hopefully this video has helped everybody today. If it has, make sure to subscribe, hit that like button, and of course, we'll be coming at you tomorrow with another video discussing the stock markets and technical analysis as a whole. Happy trading, everyone. Bye.